Then let's get this show on the road. Let's get it started. So, Tuesday morning, it's the 5th of December, and what can we say? Markets are doing what they are doing. It's. Do you guys understand now why we say December is December? December is hard to trade. You're probably seeing what a little bit of the rally that's been going on, and yeah, man. What can I say? It's December. Welcome to the December show. So, what's happening this week is we got another week full of news events. We're gonna take a look at that. Yeah, exactly, Boulder. I'm putting you up on stage here. Grand Rising, Grand Rising. So, which one of these two are you? Exactly. Ah, yeah, no, most definitely, most definitely. Yeah, you cannot be from. I don't. I think a lot of places in the world, but at least not from Northern Europe, and love Christmas. It's just the whole vibe with it. Yeah, man. I'm looking at Euro at the other screen, and it just started off with a little pumpish. But before we look at anything, I'm gonna look at the news first. Let's get this routine in. This one is important because we got we got a lot of news this week. So let's start by checking the red folders for USD because I think we got it. Yeah. So Tuesday, that's today. We got it 4 p.m. I ISM services PMI job openings. Um, Basically a good indicator of a recession. Not an expert on these news, but at least we can see that actual greater than forecast is good for currency. So if the results comes out better than what we see here, 9.3 million, 9.31 million, then we got gold that should pump. Same thing with the ISM services. Tomorrow, red folders for both GBP and USD. So GBP 12 o'clock and USD 2:15. Then for anybody trading Canadian pairs, 4 p.m. 2:30 for USD tomorrow, on Thursday I mean, and then on Friday we got 2:30. So red folders are every day this week. With that said, let me ask you guys: did anybody trade gold yesterday? Did anybody sell gold yesterday? Gold's been on a rally, on a crazy rally. And how did it go? Okay, cool, cool, cool. Nice. I can take. Yeah. Yeah, yeah, exactly. Exactly. I did definitely not buy gold. I can tell you that because I woke up and saw this. I was like, what the heck is this? Uh, like you've heard us talk about manipulations. This here is like the purest form of manipulation you can find. I don't know how many hundreds of millions or billions you have to pump into the gold market to make it pump like this, but it takes a lot. And then just selling off all position and totally reverse the market. I think a lot of people got liquidated here. And in the same time, we have had Bitcoin on a rally as well. Bitcoin hit 42,000. Basically touched the weekly key level that we got up here. We can take it on the weekly time frame. So gold is on a rally as well. Very interesting. We got order block up here. I want to see how it reacts to that order block. I'm not going to dive deeper into Bitcoin right now, but just want to get a quick overview on it. And that order block, the bottom of it is confluent with the 38, with the bottom side of the 38.2 Fibonacci retracement. So what are we on weekly? So it's a strong resistance level, and I think I firmly believe that we're dropping from here. That this is the point where we will see a retrace, a pullback. How deep? I have no idea. We will see that. That remains to see. But most definitely, we should face some hardcore rejection here. Yeah, I'm sorry, I forget to say the numbers sometimes. 44,100. Thank you for reminding me, Baller. Yeah, 44,100. Anyways, that's the level where we should start to see some major resistance on Bitcoin. With that said, let's look quickly into EURUSD on a 5-minute time frame, because it's doing some things here. So as soon as London opened, this candle was created, and what I want to see now is if the 127.2, so the Fibonacci extension on the bigger time frame, holds as support. If we will reject this level and use the support to continue upwards. If so, then we want, of course, to see some form of change in character, break of structure, and that would be from this top here. Boom. I want to see this top break to confirm some form of bullishness. Yeah, showing that a good support. Even the 20-day EMA is being well respected here. Market is bouncing off. So EURUSD looks quite bullish right now. Just take a quick look at the, yeah, so it's Dixie's not moving much, but EURUSD is pumping, so it means the euro has started this morning very bullish. It is fresh money pumping in from the London session, or from the London banks, and Frankfurt, and Schweiz, and France, and all of the beautiful countries in Europe. These ones. This is the EMA. This one, EMA 20, 50, 100, 200. But I only use the 20 and 200. So, oh, let's see if I can get into the settings of it. Ah, come on. Then let's do it like this. Why are the settings not working? Well, for some reason I cannot get into the settings right now, but I'm gonna print screen it later and post it. It's the 20-day and the 200-day EMA, and I use them a lot. They were actually on by accident now. I use them mostly for scalping. They are very good to see, to get more confluence on levels of support or resistance. So let's say, for example, I see market coming down here, rejecting the 127.2, and the 20-day EMA is confluent with it, then I know that the support is even stronger. That gives me another confirmation that this support is good here. but never use this indicator alone as a sign of support or resistance, because it's okay, you see, it's respecting it well, but it can play around with it a lot also. Alright, so we took this top, and we got actually a silver bullet going on right now. You guys see it? I'm not taking it yet. I want to see it on the 5 minute. Oh man, this thing went up quick. Yeah, but just be patient with it. There's no rush taking it. Either comes back or there will be another opening. No, this one, we're not taking this one because the break of structure here, the changing character, the break of structure is too shallow. We want to see a more firm break of structure, and preferably the fair value gap going through that changing character. All right. If you guys, I don't know if you guys remember, but every time we have taken these questionable break of structures or changing characters, we have been stopped out on them. So we don't want to do that again. We learn, we do mistakes, as anybody does, but we learn from them and then we become better. And then again, if the market runs, no problem, let it run. There will be other opportunities. It's still just 30 minutes in, so it's cool. I would love to see a little pump now up to the 20-day EMA, reject it, come back down to test or to fill a fair value gap that it has left behind when it pumped up to the 20-day EMA, while firmly breaking the structure here. So that's what we're looking at. But we let it do what its thing for a little while, and then we move on to check the other markets. I will also look. Yes, eh?
There's also another indicator where you have a top line and a bottom line, supply and demand line. Do you remember what that indicator is called? Usually when I start trading you, I started with that, but somehow I pushed it away. That's the way.
This is the RSI. Relative Strength Index. So yeah, so it's a good way to see if the market is oversold or overbought, but it's same thing there. Absolutely nothing that you should use to base your trading analysis on. You can use it as an extra confirmation to see if it's pointing in the same direction as your analysis does. All right. GBP has started a little bit bullish as well. Looking at this one, I'll remove the 20-day EMA because it's just distracting. 20-day EMA is more something like, let's say I've done the analysis, and then I can bring out the 20-day EMA to see if it confirms. Or actually, when I scalp US30, then I can base the scalp entries out of the 20-day EMA or the 200-day EMA. But it's different because it's very small moves that I'm looking at. So I'm looking for that small rejection from the 20-day EMA. All right. No, it's not that that's more for scalping. It's that here's the thing. So what market does, you have the 20-day EMA and the 20-day EMA. I mostly talk about the 20-day EMA because it moves much faster, so it's being hit more often. And what happens is, like here for example, market comes, taps it, and most often has some form of rejection from it. And when in that little rejection is what I'm scalping. All right, so the little pullback that it most often has from it, I'm scalping it. Sometimes it's big, sometimes it's small. And we're talking about a move of about, when I do it in the US 30, I'm talking about 5 pips, 6 pips. It's a very small move. Like you see here, you saw it rejected it a little bit, even if it wants to continue down, but it will have that little rejection. Uh, and it's because a lot of people see this and trade out of it, so they use it as yeah. A lot of people use this as an entry point. A lot of people program their bots based on the EMA. Yes. Not always. Sorry, pardon my voice. Not always, but very often, yeah. But if so, then you want to see the candle close below it. Like this one, for example. We're on the 1 minute now. Oh snap! What did I do? Back to eurusd. We were on gbpusd. All right, cool. So like this one, for example, you see it tried to tap below it, but then it closed above it. And yeah, so it was trying to push below it, but it didn't manage to properly. So this one is still bullish. And like you see here, for example, if I would have entered for on a scalp on this one, then we would have been successful now with it. And this is what I mean. But I mostly do this on US 30. Why? Because these small moves on GBPUSD, then you have to use a very big lot size for it to be profitable. And on the US 30, it gets profitable much quicker, so to say. On the GBPUSD. Aha, here. Yeah, but yeah, yeah, but the problem is there was no fair value gap here. Yeah, I was looking at it also. I was like, yeah, but yeah, no, I was checking it also. It looked very nice, but it didn't. There was no fair value gap behind it. Otherwise, we would have absolutely have entered on a perfect silver bullet. What it used was this order block right here. So it used this order block to propel it up. But the thing is, we stick into our rules with the fair value gap. Why is it so important? Because if we start looking, oh, but maybe it's the order block, maybe it's this fair value gap, maybe it's this wick, maybe it's this or that, then we will see so many. We will get distracted by so many different things that will tell us different things for the market. So it's very important to have your set of rules. Just stick to them, and then just adjust it a little bit along the way, but don't change it. Let's say we eagerly want to get on a buy here. Then we see, okay, but here's an order block that advocates that the market will bounce out of it. Off it. Here's a fair value gap. Here's an EMA. Here's this. Here's that. So, but what you can do is you can look for confluence. Here we had actually confluence from the 20-day EMA, and we had it from the order block over here. We had strong support based on this order block. As you see, market's been wicking down. But honestly, we didn't look at it. So therefore, basically, at least me, I didn't see it. I saw it with one eye, but I didn't pay too much attention to it. So this one, we're letting it go. We took, what did we do? We took 3 losses last week or something like that. So on the live session in total. So I'm kind of eager to get on a couple of wins now. That's why I'm a little bit more cautious with what we're getting into, especially considering it being December. But I must say the structure, like how the way it's building its way up, it's beautiful right now. So right now, if you're looking at it, we have this here going on. Wait, let's go to the 5 minutes, see what's happening. Okay. So now we got a fair value gap. Boom. Boom. And we're inside of it now. Fair value gap. And here we get the 20-day EMA. Perfect bounce off. Entering with a small position, GBPUSD buy. That's it. Going in with a small one on this one. Stop loss underneath here. So we have a 5 pip stop loss, so it's a good one. Actually putting it a little bit more. 6.5 pip stop loss basically. Take profit at 1.2634. Stop loss 1.26147 exactly. So I hope you guys see the numbers. Okay, cool. And while that one is running, we just quickly going to look at GBPJPY. Oh, oh yeah, we had a nice one here. This one is still valid though. It's still inside of it. It's just that it came big. We had a nice discount on it. Yeah, you could enter in this one, but just be cautious with the lot size, because if you're entering GBPUSD and GBPJPY, then you basically have 2 GBP pairs in the same direction. I'm going in with a small lot on that one as well. You see, I was testing the 20-day EMA. It's going to be interesting to see if it breaks it. The nice thing with this trade here is that the stop loss is very small. This is basically a sniper entry, so even if we get stopped out, we don't go for a major loss or something. We can take it, but it should go in the right direction. Boom, boom, boom. We got 185.4 almost. Oh, you can say it, even say it. 185.4 on the take profit, and stop loss is 185.119. That's there. And remember also, always take the spread into calculation when you put your stop losses, so you don't get wicked out on the spread. So when I say like 187.119 on the stop loss, you have to add the pip for the spread also. I don't know, it depending on what broker you have. Perfect, thank you, man. I have to put the take profit. I didn't put the take profit myself on this one. 127, 1.2734. No, 1.2634. You know what? On this one here, on GU, we go into adjust the take profit, so it's a little bit lower. Put it here at 1.26330 instead. It's half a pip down. Why? Because we have this order block here, but we don't want to get, we don't want the market to turn just underneath our take profit. So just to be safe, we put in the take profit here. Basically, we're targeting this here. OB, 1 minute. So right now what's happening is that the market is squeezing. This is a squeeze. So it's being squeezed between the 20-day EMA and the 200-day EMA. It needs to pop out in the right direction. Perfect. Yeah, the 20-day EMA on this one is much higher, as you see. Yeah, man, that's good. We'll see. Anybody want a discount entry? We might get one soon. We're letting it run. It's like I said, with the silver bullets, it's always set it and forget it. Makes no sense staring at them. In the meantime, it's better that we look at other stuff. Yeah, you know what, Okan? I'm with you, man. I want the gold to pump as well because I've been I was staring at this yesterday. Actually, I took, to be honest, I took a buy from here. I thought the market was going to really reject the key level. I had my stop loss underneath. I got stopped out with this candle here. But as you see, also it came in perfectly to the, I think it's 4-hourly fair value gap. Yeah. So it dipped into the fair value gap perfectly, mitigated the whole fair value gap, took the bottom of it as support, and this should be quite bullish considering that. So basically, what we want to see now, here we have perfect confluence. So what we want to see now is this 20-day EMA on the hourly time frame taken. Same thing with the daily key level here. That is confluent with it. We want to see it taken. And when I say taken, what do I mean? A candle closed above. It doesn't have to be an hourly candle. It will be enough with a 50-minute candle closed above. The downside with waiting for that, this is the game of patience and being just being patient and disciplined with the market, because the downside is that of course the market can run away. We missed the trade, but it's either taking a risk, believing that it's going to continue upwards from here on this uptrend that it has built, or waiting for being conservative and waiting for the proper confirmations. That's always a balance that you have in trading, and that's the decision you got to make. That's why I like with silver bullet that we're very mechanical. We don't have to reevaluate so much. $20.30 over here, perfect. Nice, nice. Very nice. Yeah, man. I do want to say bye, but I'm not going to do that because it's not strong enough, man. I want to see, like, we have an uptrend here, but you see also how the uptrend is rejecting the daily key level. the stripe, the baby blue striped line. So it basically was uptrending and then just boop, bounced off, broke character downwards, and then again is trying it right now. That is trying it right now again is a good sign, but still though that it hasn't been able to break it is of course weak. So let's see what it does. And even if it breaks it, next level directly above it is the order block here with the 200 EMA. So we will see what happens. It's nothing we're jumping into right now anyway. But it would be if it goes up from here. I think we're going up for a while. I think there's a lot of liquidity to fill in this sweep here. This here is basically a liquidity sweep. And I have to say something, guys. If you've been on these streams for a while, then you know I've been preaching about these levels for a while now, and we knocked it off very nicely. We hit, and it's like it's crazy. Gold hit what 21 point, yeah, 2150 almost. That's insane. That's insane. And it did it in a couple of, what was it, in 1 hour or something. I don't think I've ever seen gold move that aggressive.
Yeah, but you talk about Håkan says here perfectly. Was talking about these levels when gold was at 1920 and now it's like you say now.
Yeah. Yeah, but I'm gonna be honest, and it's true. I talked about it, but in the same time also, we have taken positions from what 1920 and stuff like that. But it's to hold it. That's the problem. Yeah, you know. So like we haven't like I don't want to say we haven't believed in our own analysis, but not enough to hold it all the way. And you know, this here it went much more aggressive than I thought. I didn't think it was gonna go that aggressive, but it did. We'll see. Yeah. That is cold. Definitely, most definitely. I just looked at my MetaTrader and I saw something. I saw that GU has been sniffing our yeah, not sniffing our stop loss, but went down a little bit. I actually opened one more position down here. So took the discount. Let's see if it holds. But I don't like the little downtrend it has formed. But it's on a 1 minute. Yeah, I don't. What I can imagine that it wants to do is dip into this fair value gap again. It did it so here. It did so here. Maybe it wants to come in one more time before it bounce off. The good sign is for us is the wicks. You see these wicks, basically exhaustion wicks, grabbing liquidity, moving back up again. Our GJ trade is running perfectly in profit. This one is beautiful. Yeah, man. Soon. We're not far away now. Let's see. So this is what it's going to, what GJ is going to reject, which is basically it's doing right now. So you can start, you know, closing off your positions if you're nervous about it. I'm leaving it all the way up. I'm actually even thinking about something else. Look, I'm actually even thinking about closing only half here and letting half run. Why? Because I see a much more upside on this bounce off here on GJ. But it's a little bit risky, a little bit more risky move. We'll see. If you want to be, if you have a good profit, if you have a good bag, then close it when it's up here.
I took precautions. I only went in with 0.05 lots.
Okay.
I'm just running a couple of dollars in top.
Okay, but that's cool. Well, sometimes it's like I always say, you know, that's like psychological factors. It's not even about the numbers. It's just getting those wins, just getting a couple of wins, so you have the confidence in what you do and you feel that you're doing the right thing. Yeah. Yeah, all pairs that's paired against Japanese yen is have a different way of counting pips. Now our GU trade is also going better. I'm definitely in profit on my discounted entry, and GJ is doing very good. And we got, come on, 1 pip more. I took my take profit. I'm out. You still in? Perfect. Nice. Our first win for the day. Live. Perfect. Maybe this will be a revenge week from last week. No revenge trading, but perfect. I took $254 on this one. So it's okay. 2. Yeah. It's good. Yeah, I told you it's going to continue up. I said I'm going to close half position and let the other one run, but nah. But yeah, but I didn't do it. I closed. I just left this take profit as it was, because same thing like I just spoke about. You know, same thing for me. I need to get a couple of wins under the belt now to get the get on the winning side again. So better take. Yep. Yeah, exactly. But in this case here, I just wanted to build up the account a little bit. GU is a little bit tricky. It took the high here, but not very firmly. So let's see. It's in the fair value gap here. Let's see how it respects it. No, this one is like we had our entry before here, on around what was it, 1.262, but if it taps back down here, then of course it's a nice discounted entry for anybody that missed the train over here. Only thing is that the more times it taps in here, the weaker it gets. You have to understand that the weaker the support gets. So yeah. 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 It's having a hard time breaking through. Basically rejected. Let's look at the 5 minutes. Okay, so it's basically pure price action resistance here. It's this bottom that is rejecting. Yeah, so a lot of traders. So, for example, like when I started to trade, and most people that start to trade from I don't want to say it's newbies. There's a lot of advanced traders that use price action as well, regular price action. But you can like you see all the. So I see that the market has. Wait, let me do like this first. Boom. Let me. Yeah, just so you see it more clearer. So you see that the market is rejecting. So this is a very strong support line. So instead of basing your analysis of order blocks and fair value gaps, liquidity zones, basically, you're just looking at the price action. So where's the action? Where is it bouncing off from? Understand? So here we had support all the way. And then we broke through, and now what happens? It has flipped as resistance. So now a market is seeing this as a resistance level instead, and it's trying to break through, and it's having a hard time breaking through it. And that's when you trade pure price action, basically. Why we trade, and that's a very easy way to analyze the market. You look for support levels, you look for resistance levels. We do that on the weekly and the daily to get those key levels. Why we trade based off order blocks and fair value gaps is because these price action levels are they occur because of order blocks and fair value gaps. So it's like we go in one step deeper and looking at the reason to why they occur, and using that as our areas of interest, points of interest. From this top here. There's no confluence. So you see the 61.8 from this top. Wait, let me see on the 50-minute what we got. Yeah, 50-minute shows it much better. So from this top, before the market dropped down, we have the 61.8 perfectly confluent with this, basically with the bottom of this support here that is now flipped as resistance. And this is what the market is rejecting. I'm starting to dislike this trade because it's leaving a lot of wicks after it behind on the upside. Yeah. Yeah, but you know what? You know what? If so, then it would have rejected it more firmly from beginning already. It didn't. But we'll see what happens here because it's not very strong right now. I think that I am going to close one of the positions. It's at break even right now. It's almost at break even. I'm going to close one of the positions now in break even. I'm going to take some risk off the table and letting the discounted position run, because the thing is, when things look, it's very important also not to get married to a trade. And like we bought it, and then we stick it through. We want to see it really. We really want to see it go all the way. But if it starts to show weakness, and week after week after week confirmation, so sell confirmation, suddenly the bias of the market has turned, and now it's looking more for like a sell than a buy. Then it's time to just accept it and do what needs to be done, and that is, of course, close positions. Especially if it's at break even, then just close it, or slightly in profit. Close it if you start doubting the trade, because you don't lose anything by doing it, but you lose if you hold it and it turns. And of course, people might consider that lost profit, but no realized profit is profit, right? Only realized profit is profit. So always keep that in mind. So you haven't lost any profit if you haven't realized it. And if you're going to think about lost profit all the time, then you're always going FOMO into trades. Sorry, say that again, because somebody was messaging me on the phone at the same time. Fixed volume profile. So the reason why I'm pulling it up is because I don't want to have too much things going on here, but we can do it just for trading purposes. So, and actually, what I'm gonna do, I'm not gonna put out the fixed volume profile. I'm going to use the volume profile. Where is it? Visible range. I think it's this. No, it's not this one. Where is it? Maybe it is this one. Oh yeah, it is. Okay, cool. So no, I normally use the what was it? The visible range volume profile, and I'm explaining it a little bit. So here I put in row size 200. Boom, like that, to get it a little bit more accurate. And of course, what you're looking at when you're looking at this, you're looking at volume clusters like this here. For example, this is, you see the market is stuck here. There's a lot of volume going on here. So basically, and when you have a lot of volume in a special place, that's a liquidity zone, of course. In this case here, basically an order block. What this one does is that it shows you the volume of whatever's visible. This is why it's called a visible volume profile. So you see, if I zoom out, boop, it shows different. So it will show you the volume of whatever's visible on the screen. So what I'll do is, like, let's say I want to see the volume of this whole drop here. I just pull it back, so that is the only thing visible. The top is over here. We get the bottom, and then we see where the volume clusters are in this area. All right, you with me so far? Okay, cool. So what you do then is you wanna aim for your targets is always places where there is volume clusters, like here, for example. So we have our take profit on this one here, on this order block, and where's the next volume cluster? Perfectly confluent there. And you will always see the volume clusters around order blocks. That is what order blocks is. That's volumes of orders laying there that are untriggered. But in the same time, with this thing here is like, look now, for example, if we would base a trade from the visible volume profile, from the volume in the market, what we would do in this case here, we would have a take profit, a stop loss underneath this cluster, whole cluster here, and you see that the volume underneath it is shaded. It's not as visible as the one this in the middle, and this above is also shaded. Why is that? It's because 70% of the market volume is in the highlighted volume. All right, so 70% of the market volume that we see here is in here, in this area, and 30% is in the shaded area here. And this will be no matter how much we pull up the volume profile, how much we zoom out, you will see different all the time. It's a very interesting tool to play with and backtest, because what you will see is very accurate. It's market respects these areas very well. But here's the thing: you have to get used to trading it or using it, and you cannot use it as like a fixed level. You use it as confirmation, basically, of how strong certain types of order blocks are, and then you have an area. like an area of interest. You can it won't give you a specific point of interest. The red line that is here, that crosses horizontally, that's the level where there's the most volume, where the volume peaks. All right. And as you see now, if I take the whole the visible range from the top here to the bottom, then you see that the red line has been very well respected as support right now. Now it broke through actually, so it's coming down again. Right now it's a right now they're in the ring and swinging it out right now. It's a slug war. Nobody has the upper hand. Yeah, so basically what it's doing right now, I think it's tapping into this order block here. The interesting thing to see is if it will respect it or if it breaks it. If it breaks this lows, we're going down. I think we at least hitting a little bit more of these fair value gaps, but I think we're going all the way down to this order block here, aiming to tap some sell side liquidity. If it respects it, then I think we're going all the way up. Yeah, say it again. You hear me? Oh, sorry. Okay, so both indicators are showing the same thing. They're showing the volume in the market. The difference is that the visible volume range profile shows the volume of what's visible on your chart, on your screen, and it changes depending on what you show on the screen. While the fixed volume profile, you pull it from, for example, this top to this bottom, and then you see the volume inside this leg here, inside the sequence. Exactly. Yeah, GU is what? Oh man, I should have had this. Nice one though. This one was good. But I told you, I think it's coming all the way up here. It did so, but you know, this is the thing. You take a couple of losses, then you have to, you know, lick your wounds and take a couple of quick profits to get back. Definitely, 100%. And this is the things. Remember what we said, what we spoke about last time, Boulder? That never look at it again and be like, oh, I could have held it, or if I would have held it. You know, no. If there's no ifs, you do what you got to do, and then look at the next one. So exactly. So we took a bag. We're very happy with it, and now we're just looking if GU will do its thing. The thing is, these sideways movements can take a while sometimes. So what we are going to do, we're going to proceed here, looking at the market. I want to talk about Euro USD, also gold, but on a bigger perspective. I'm gonna do like this. I'm gonna remove the volume profile. I'm gonna remove some stuff so it gets a little bit cleaner in the chart. So a quick one. When it comes to gold, not only gold and Euro USD, basically all pairs. What happens is we're gonna go back in time a little bit. We can go on the daily time frame. This is the daily time frame. Good. Let's go to New Year. Where is New Year? 2023. Most often, when the new year starts, what happens is market is most often rallying in a certain direction. And like you see here, so from January till February, we had a bull run like this. It doesn't mean that it has to be a bull run. It can be a sell-off also. But most often, that first, actually, this one is short because normally it's like 2-3 months. You will see market pump in a certain direction, which it basically did. But we just had a major pullback on it. But so gold first month pump bullish. Euro USD, New Year. Let's look at it. Yeah, so you see here, New Year had a dip first, basically sweeping some liquidity, and then just went off for all of February, for all of January, in a bullish direction. So this is across all pairs basically. Indexes, I'm not as sure. I have to see. No, a little bit more choppy there. Let's see, SPX. SPX went bullish. So, and this is, you see the same thing for example, Bitcoin. I know that BTC has a tendency to pump in a certain direction when the year starts. Yeah, very clear, as you see here. So, what I want to say with this is, we want to, so when January starts, we want to position ourselves in a swing trade situation where we have a trade that runs for a little while. We want to wait first. We will focus on Euro USD and gold. We want to wait first for a little sweep of liquidity. Let's see how gold behaved if we zoom in a little bit on January. Pumped up, pulled back, retested the weekly key level, and then it went up. So basically nothing advanced. Very nice, very beautiful price action here. If you look at the same thing on Euro USD, you see this liquidity sweep, market coming in, accumulating for 3 days, and then it started to pump. So we are looking to position ourselves, and basically the sweep also happened. Yeah, it took that order block. Yeah, we will have to zoom in to see more details. Basically, what we want to do is we want to get this position, and I'm not saying that we will get in directly on the first or first, of course, is closed, but second, third of January, but maybe 4th, 5th, 6th of January, we will find a position, a swing trade position that we will hold for a little while and ride it out. Because I've seen this every year. It's the same thing. Market finds a direction and then it runs in that direction. And most often, it basically continues. After a little pullback, it continues on the trend that it's already been on. As you see. So we'll see. But all, of course, also depending on the fundamentals. By the way, we speaking about Euro USD. I saw something that I have to check. This very bullish. Oh, Euro USD is running. Yeah, guys, but that's basically it. Oh, beautiful. GUSD is finally moving towards our take profit. Nice. Yeah, but two beautiful silver bullet trades. We took GJ, we took GU, and yeah, man. With that said, I wish you guys a beautiful day. I see y'all on the New York session, 4 o'clock.